Welcome back to our channel, where we dive deep into the fascinating world of industry giants. Today, we're bringing you an exciting showdown between four major players in the auto manufacturing sector: Ferrari, Stellantis, Toyota Motor Corporation, and Tesla. We'll break down their key financial metrics, explain what each one means, and compare them head-to-head to see who comes out on top. Get ready for a roller coaster of insights and numbers that will keep you on the edge of your seat. First up, let's talk about the price-to-earnings ratio, which tells us how much investors are willing to pay today for a dollar of earnings from the past year. Tesla leads with a whopping PE/TTM of 88.75, making it the most expensive relative to earnings. In contrast, Stellantis offers the lowest PE/TTM at 1.89, suggesting it's seen as the most affordable. Ferrari and Toyota sit in the middle with PE/TTM of 56.46 and 7.10, respectively. Looking at the PE 5-year average, Tesla again stands out with the highest average at 139.98, indicating consistently high investor expectations. Ferrari follows with an average of 48.47, while Toyota and Stellantis have lower averages of 8.18 and 3.82, respectively, showcasing more moderate investor sentiment over the past 5 years. The forward PE ratio shows potential future valuation. Tesla's forward PE drops to 64.82, suggesting expectations of future earnings growth. Ferrari's forward PE is 45.91, showing steady investor confidence, while Toyota's 7.69 and Stellantis 3.14 indicate more conservative future valuations. Moving on to the price-to-earnings growth ratio or PEG, which considers the PE ratio relative to growth. Toyota shines with a PEG of 0.42, suggesting it's undervalued considering its growth prospects. Ferrari's PEG of 3.18 and Tesla's 3.24 indicate pricier valuations in terms of growth expectations. Interestingly, Stellantis has a negative PEG of -0.51. highlighting potential concerns about future growth. Insider ownership shows the percentage of shares held by insiders. Ferrari tops the chart with a significant 32.69%, indicating strong confidence from within the company. Stellantis follows closely with 30.85%. Tesla has 13.01%, while Toyota has no insider ownership, showing less insider stake in the game. Profitability metrics are crucial for understanding company efficiency. Return on equity showcases how effectively a company uses shareholders' equity to generate earnings. Ferrari leads with an impressive 47.62%, demonstrating efficient use of equity. Tesla follows with 21.13%, while Toyota and Stellantis trail with 15.42% and 16.79%, respectively. Return on assets follows a similar trend, with Ferrari at 16.47%, showcasing asset efficiency. Return on invested capital highlights Ferrari again at 28.39%, indicating excellent management of invested capital, while Stellantis also shows strong ROIC at 20.26%. When it comes to the evolution of shares outstanding, Ferrari shows a flat trend, potentially indicating stability. In contrast, Stellantis is increasing shares at a compound annual growth rate of 19.62%, and Tesla is also increasing shares by 7.18% CAGR. Toyota shows a decreasing trend with a -1.73% CAGR, indicating potential buybacks and value return to shareholders. Continuing with the earnings per share or EPS, that is another key metric. Toyota boasts a solid $24.37 EPS, leading the pack. Stellantis and Ferrari follow with $8.53 and $7.68, respectively, while Tesla lags behind with $1.64. However, looking ahead, Tesla is expected to see a significant increase with a CAGR of 27.38% over the next 5 years, showing strong growth potential. While Stellantis earnings per share is expected to decrease an average during the next 5 years, the evolution of earnings per share over the last decade shows Tesla leading with a 54.33% CAGR, indicating robust growth and going from negative earnings per share to positive one despite being low. Stellantis and Ferrari also show strong growth with CAGRs of 20.52% and 22.14%, respectively. Toyota, while positive, has a more modest 11.45% CAGR. Next, let's talk about free cash flow per share. Ferrari leads with a 17.59% CAGR in the last decade, highlighting strong cash flow growth. Tesla also shows positive evolution, while Stellantis has seen a decline with a minus 8.90% CAGR. Toyota has had a negative evolution, raising potential concerns about cash flow management. For all you dividend lovers out there, Stellantis offers a generous yield of 10.23% with annual payments of $1.65, making it the highest among the four. However, its growth has been negative during the last years and his payment is not consistent. Toyota provides a solid 2.83%, with semi-annual payments between $2 and $3. Additionally, the concerns about a new dividend cut increased highly after the free cash flow payout ratio exceeded 100% during this year. Their dividend growth during the last decade has not been so spectacular due to some declines in some years of difficulties. Continuing with Ferrari, who offers a modest 0.6% yield with annual payments of $2.61, however, the free cash flow payout ratio is the lowest one, and its growth was spectacular during the last decade with a compound annual growth rate over 2 digits, concretely 21.56%. Finally, Tesla has not paid dividends and his commitment is to reinvest all its free cash flow into company growth. When we analyze one company, it is essential to take a look at its margins. In this case, Ferrari leads with an operating margin of 27.55%, indicating excellent operational efficiency and its condition as a luxury car manufacturer. Toyota follows with 11.85%, while Stellantis and Tesla have lower margins of 9.66% and 7.58%, respectively. This decrease of Tesla margins during the last 2 years reflects the increasing competition in the electric vehicle industry that leads Tesla to have margins like companies of decades of history. On the other hand, profit margin follows a similar trend, with Ferrari at 21.79%, showcasing high profitability. Tesla comes next with 13.04%, showing good profitability but still trailing Ferrari. Toyota and Stellantis have profit margins of 10.7% and 7.55%, respectively. The evolution of revenue and earnings over the last 8 years shows a very positive evolution for Ferrari, Stellantis, and Tesla, reflected in their market performance. All three have achieved higher total returns than the S&P 500 ETF during the last 5 years. It is to be commented that Tesla has had a total return over 1,000% during the last 5 years. Toyota, while showing positive evolution, has obtained lower total returns than VO. Debt to EBITDA shows us how many years it would take for a company to pay off its debt using its earnings before interest, taxes, depreciation, and amortization. In simpler terms, it's like asking, how many years of my salary would it take to pay off my car loan? Tesla has the lowest ratio at 0.78, indicating strong financial health and his low debt levels. Stellantis and Ferrari follow with ratios of 0.94 and 1.01, respectively, while Toyota has a higher ratio of 3.92, indicating higher debt levels relative to EBITDA. Next, we have debt to free cash flow. Ferrari shows a ratio of 1.69, indicating strong free cash flow management, and the best debt management of the 4 companies. Stellantis follows with 2.38, that is also a good sign of financial health, while Toyota has a higher ratio of 4.74. Tesla has the highest ratio of 5.58, indicating it needs to address its cash flow issues urgently, but as we commented before, has no dividend payments to afford and uses their free cash flow to continue growing over the 2 digits. Let's continue with the average price return of the last 52 weeks that shows Ferrari experiencing significant growth at 38.28%, the only one who has had a positive return during the last year, while Stellantis and Tesla have seen declines of -18% and -18.28%, respectively. Toyota has a slight decline of -0.48%. Finally, let's talk about market capitalization. Tesla leads with a staggering $663.43 billion, followed by Toyota at $237.54 billion. Ferrari and Stellantis have smaller market caps of $77.87 billion and $61.03 billion, respectively. Now let's talk about the moment that all you are waiting for, the crystal ball and analyst expectations. Analysts predict varying price targets for the next 12 months. Ferrari's price target is $412.19, representing a downside of -4.94% from its current price of $433.59. My fair value, however, is $356.11, suggesting current overvaluation. On the other hand, Stellantis has a price target of $27.90, representing an upside of 72.97% from the current $16.13. My fair value is close to Analyst 1, around $24.77, indicating potential undervaluation too. Toyota's price target is $236.02, representing an upside of 36.41% from the current $173.02. My fair value is a little bit lower at $194.91, also suggesting undervaluation. Finally, Tesla's price target is $203.79, representing a downside of -1.87% from the current $207.67, and my fair value is $166.47, indicating current overvaluation. So we have the most growing companies with the higher prices and indicating a potential overvaluation, while in the other two we have better current valuation but also more concerns about future growth potential. And there you have it, folks. An in-depth, head-to-head comparison of Ferrari, Stellantis, Toyota, and Tesla. Each company has its strengths and weaknesses, and now you're armed with the knowledge to make an informed decision. From my point of view, I only choose Ferrari to be in my personal portfolio, but I will wait for $350 per share price to start considering this company, while the other three did not match my requirements to be in my portfolio. So, which auto giant caught your eye? Let us know in the comments below. If you found this video insightful, don't forget to like, subscribe, and hit that notification bell so you never miss an update. Until next time, keep investing wisely.